Hello, good weekend to all. Bringing a review of the FTSE 100 and amongst that with the European indices as well. Just giving you an insight into what the trading session will hold for Monday's trading, the 18th of January 2021. Okay, let's get started then. So basically, the focus will be in terms of this week again. Also, mainly the main area again will be COVID, infections, vaccines, the progress there, and obviously the stimulus with regards to the US. We also have PMIs on Friday to watch out in terms of obviously the growth and the reactions thus far, and also in terms of the European ECB meeting on Thursday. So watch out for those key events in terms of the markets moving forward. We did have a risk-off rally, risk-off move on Thursday, Friday, and that was mainly due to the fact that obviously Mr. Biden's so-called stimulus certainly wasn't anywhere near as anybody expected. Well, it was to a large extent, but whether it gets passed is another story again, and that's why we had this risk-off rally, which obviously reversed the inflationary rally in commodities, which obviously hurt the FTSE 100 to a large extent. Now, we have had some strong news or bullish news from the UK. The cases in terms of infections are dropping. The actual control of the variant as well certainly is proving to be strong. Okay, although on the negative side there has been some obviously not many but a few cases of individuals dying as well, so just bear that in mind. I think in Switzerland or Sweden, watch out for those. In terms of Chinese GDP, that will be a key event as well tonight. Expected to come out stronger than expected, and obviously they are looking at potentially vaccinating the majority of the country in terms of the UK, and therefore turning the tide in terms of being the worst country, and the mismanagement, which is pathetic with this current Tory government at present. It's absolutely shambles, but let's not go into that. Okay, let's go into the technicals then straight away in terms of the FTSE 100. Okay, so as you can see there, we had a risk-off event. Now we've retraced 50% of the daily chart. Okay, we are, provided we hold the 6640 zone, bulls obviously remain in control, and we are looking to potentially thrust higher up to 7,000. So that's a very high possibility or probability. So again, just bear that in mind. Again, that theory can certainly turn very, very bearish very quickly. So again, just bear that in mind too. Having said that though, we did actually hit a pivot low of 6677, and the market certainly did buy back into that quite powerfully. So just bear that in mind in terms of the trading going into next week. Okay, 60-minute chart, we've made a bottoming tail for now. 6670 is your pivot low, which obviously is right above 6670, which is previous resistance equals support. Also at 6670 along with the diagonal trend line, and obviously you got 6640 as well. If that key area were to go, then you are looking at the next support being the 6550, and then obviously ultimately looking below at 6465, and then you got support down at 6300. Now you would need a major risk-off event for that to occur. For now, if the FTSE can break back above 6740, then it brings back in 6800, potentially 6877 and 6900 as well. So keep that on your radar. 10-minute chart, very bearish at present. You've got the unfilled gap at 6800, so I won't be surprised if that closes. For now, provided we get above 6740, then the bulls obviously trigger or target 6755 and the pivot high at 6780 before obviously we hit gap fill. So watch out in terms of those zones above in terms of the FTSE. Okay, in terms of European indices, let's just have a look here. Now again, they did start to make a recovery on obviously Friday. Bearing in mind, obviously, the German DAX has obviously broke to new highs, so you have to respect that. I mean, if you just look at the weekly chart, it's super bullish. I mean, it's like the all-time high in German DAX. Very, very bullish. We've obviously closed above the breakout, so again, still remains bullish until proven obviously guilty. This market has been very, very resilient. ECB super easy policy there. There has been some news event over the weekend with regards to the ECB moving away from the dollar. It'll be interesting to see how that obviously impacts the market. And again, like I said, the ECB meeting Thursday, and also obviously the PMIs on Friday as well. We have had Italian political uncertainty, so again, keep an eye out there. French increasing the curfew, increasing lockdown restrictions, obviously infection rates, etc. Again, that will have a bearing in terms of the market as well. 60-minute chart on the German DAX. Obviously, we hit that 200 MA. We've bounced off that for now. Again, it's bullish until proven guilty at the moment by the by the look of things, obviously the US lack of stimulus in terms of $2,000 expected came out 1,400, and again, even that potentially has a hurdle to pass in terms of it moving forward in terms of stimulus. So again, keep an eye on US equities as well. The French CAC, to me, really compared to the German DAX, is the weakest link. As you can see, German DAX pushed to new highs, whereas the French CAC is certainly dwindling, having obviously frozen and failing to even test the previous high. So again, watch out for the French CAC given the high numbers, cases increasing there, and obviously COVID, I think curfews being imposed. Keep an eye on the French CAC. In terms of Euro Stoxx, let's just have a look here. Now, this index has been very, very powerful, has been very impressive, but again, compared to the German DAX, certainly is dwindling and lagging behind. Obviously, has found a key resistance here at double top, which is around the 3,650 zone. That will be my pivot in terms of shorting the Euro Stoxx. In terms of movement down, you do have obviously unfilled gaps below that could potentially be vulnerable to. In terms of closing. So from my perspective, certainly looking to potentially short the Euro Stoxx as well. So this is an index that I'll keep an eye on in terms of the downside. The pivot low is 3,570. The pivot high, you're looking at a resistance around the 3,616. Then you've got 3,630. Then obviously gap fill 3,640. And that will be a zone that I'll be certainly looking to be very interested to go short quite heavy there in terms of the downside. But again, it is dependent on the fundamental narrative in the market. Okay, so hope I've given you an insight there. Let's just quickly bring up commodities. As we all know, with regards to the US stimulus inflation trade, or inflationary or reflation trade, call it what you want. Obviously, the QE that's failed to inflate the commodity markets, or failed to trigger inflation, and obviously now everybody seems to be piling into this so-called commodity rally. Now, copper certainly is looking very exhausted up here. It's had a stellar move from 2 to almost 4, almost doubled in value on the back of that. Obviously, Chinese growth will be interesting. Obviously, Chinese data comes in stronger, certainly will give it that push higher. But again, has it already baked in all the bullish news? That's the question you need to be asking yourself. Have we baked in all the news? Certainly is looking at like a strong argument at present. In terms of oil as well, as you can see here, as soon as we hit that gap fill, we've been struggling on oil. Previous support equals resistance, okay, and gap fill. Watch out in terms of that move. Let's just have a look here. So gap fill obviously was around the 53 level. We've hit a pivot high of 56. Previous support equals resistance. In terms of oil, let's quickly go to a weekly chart, see if you give you an insight here. Obviously that fib 61%, the weekly chart, previous support equals resistance at 60. This is looking very, 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 very top heavy, okay? I certainly wouldn't be piling into oil in terms of the price at present. I would rather be short oil as opposed to long oil, and certainly looking for a move on the downside in terms of oil. But bear in mind, obviously, obviously geopolitical event could certainly shift oil and spike oil. So oil is a very, very volatile, obviously, commodity to trade, so just bear that in mind. And certainly no argument stopping it from potentially hitting 60 as well. So just certainly keep that into consideration, given the fact that the only thing that's keeping it at bay is the lockdowns and the infection rates. And once they come under control and the vaccines start to work, then you are going to see a potential push higher, obviously led by stimulus as well with regards to fiscal support from the US government. Okay, so this is where we stand. Watch out for the Chinese data overnight. That will be the key mover. Obviously, I think the Arab markets, the Gulf markets are certainly down, obviously in the back of stimulus, failure really. The expectations, the bar was certainly set very high for US stocks. Quickly give you an insight on US indices before we wrap up here. Now, what will be interesting to see from my perspective in terms of intermarket analysis perspective, if the S&P, as you can see here, it's still bullish. Bulls are certainly in control given the fact that we've only closed the gap. Okay, really it's just a technical correction really. In terms of the wider scheme of things, the weekly chart, obviously you can see here, certainly going to the moon at present. Very, very impressive move. 60-minute chart, we've hit a double top for now at 3825. Okay, we've got gap fill at around 3795. Gap fill below, obviously we close at 3748. Very, very impressive. We still have this key diagonal trend line, to watch out for that. If obviously we hit the gap fill at 3795 and potential double top at 3825, then I would be certainly very, very bearish in terms of European markets. So again, it's about timing. I always time my moves in terms of the actual movement in the markets as well. So again, that's based on intermarket analysis. Those that want to learn obviously my trading style, you're more than happy to visit my site. My details are there, and I certainly offer a mentoring program for all, and I also run a live analysis service where I think I exceeded around 200 points last week. So yeah, last week was a good week. The week before was a negative week though. Certainly didn't read the market as well. I think last week I made an average of around 194 plus 21. If I'm correct, that's 215, around 215 points last week. So that wasn't too bad. Although it was very hard. It wasn't easy last week, given the fact that I was attempting to short. I was getting stopped out quite a few times, unfortunately. A lot of patience was required, but obviously it pulled through in the end finally. So, okay, so that's basically where we are in terms of the market. So watch out for gap fill on the S&P. I also trade the S&P and the Nasdaq as well. And again, you can certainly learn that via the live analysis service which I run. Just feel free to visit my site. Details are on there, and also details are on my mentoring, with regards to my mentoring program there as well, inter-market-analysis.com. Alternatively, if you wish to email me, then it's daytrader@inter-market-analysis.com, and certainly happy to answer any queries. Okay, take care, goodbye now.